Good morning. My name is Bob Bush. I'm the Director of Closed-End Fund Product here at Calamos Investments in Naperville, Illinois. I'm here to chat with you about our closed-end funds and generally the closed-end fund market. One of the things, or many of the things that the closed-end funds provide is income and also an ability to diversify. Right now, across the board, investors are seeking income. We're looking at it right now at 10-year Treasury of about a 1.5% yield. Many of the yields on other fixed income instruments are very low, at historically low levels. Closed-end funds are able to provide income. The yields on our closed-end funds right now range between 9 and 12%. But they're doing it without lower credits. The other thing folks are looking for is the ability to get capital appreciation, and many of them are out chasing what we would consider to be overvaluations in the equity markets. Many non-cyclicals right now are trading at above average multiples, which is a risky proposition. So closed-end funds are an alternative, we believe, to be able to take care of this. The other thing that I think is important is that they are actively managed, so you're not buying a static index or an ETF. We have professional managers that manage the closed-end funds for income, which is their design. And we've done it for a number of years. One of the benefits that the closed-end funds have that we employ is the ability to lever. One of the concerns that many folks had at the end of last year, which is why the space traded down, was the fear of rising interest rates. Our funds borrow off of LIBOR, which has been fairly stable over the course of the last 6 months. In fact, our average borrowing costs right now are below 125 basis points. With the closed-end funds, and our closed-end funds in particular, they are balanced across multiple sectors. So you're not taking any undue sector risk or any undue regional risk or country risk. Again, many investors are overloading, if you will, on many areas that they believe are going to get them returns. And of course, we've seen that be problematic over the course of the last couple of years, where you've had a decline in the high yield space and other areas where they've gone into which have just become overvalued. Because we have the capability to be in multiple sectors and regions, we mitigate that concern. The other thing that we have in our portfolios is convertibles. Obviously, we've been in that sector a long, long time, and that's a great way to be able to take advantage of the equity markets in a risk-managed way, but also get income, again, which is important. Our closed-end funds, as of late, have experienced improving stock prices. Our discounts have narrowed. There's been many concerns about that over the course of the last year or so in the space, but they have come back. In many instances, they've outperformed relative to their benchmarks. And most importantly, they've had improving NAVs over the quarter. And this is important in assessing the continuity of distributions, because obviously if the NAV is not performing or improving, that's going to be a tax on the fund. But I'm happy to say that our NAVs have improved over the quarter. So in summary, the closed-end funds, I think, address a number of key issues right now in the minds of investors. They're providing income, and again, that's without what I would consider to be undue credit risk. We're providing returns, again, without concentration in overvalued areas. We're providing sector diversity and regional diversity in our funds that focus on assets outside the United States. Again, professional management, a portfolio team that's been managing closed-end funds for a long, long time, and that's a special skill. And importantly, we're able to take advantage of low borrowing costs. Again, many concerns people have out there is that there's a lot of low interest rates, but because we're able to borrow at low rates, that's advantageous to our clients with respect to providing both income and total returns to our funds. So in essence, I think this is a great time to be considering closed-end funds for your clients, again, from a total return perspective and also that much-needed income which they seek. Thank you for your time.